All right, let's be real. Most people think option trading is just a fancy way to gamble away your rent money at a digital casino. But what if I told you the pro actually use option to stop gambling? Today I'm gonna show you how to turn the stock market into a boring, reliable side hustle using a strategy called cover call. Look, there are two ways to play the market. You can be the guy betting on a horse to win, or you can be the guy who owns the horse and charge people to take picture of it. We want to be the owner. We're going to use options to lower our risk and actually get paid while we wait for a stock to go up. Think of option like a pre-order for for a pair of limited edition sneakers. The stock, that's the shoe. The expiration, that's the pre-order link expired Friday. The strike price, the price locked in, let's say $200. The premium, the $20 you pay someone to hold your spot in line. If the shoes blow up to 500, your $20 spot was a steal. If they flop, you just lose $20. So why does the price of that order change? It's basically six ingredients. How much the stock costs right now, the price you're trying to lock in, the time, let's say closer to Friday, the cheaper the ticket, the vibes, the volatility, how crazy is the market acting, interest rate, dividend, the boring stuff that adds up a few cents here and there. Here's the thing about options. They have a use by date. I call it a rotten potato rule. Every day that passes, the option loses a little bit of value. At first, it's just a brown spot, but in the last few days, it turns out to be much faster. As a trusted strategic investor, we want to be the guy selling the banana before it goes bad. This is the bread and butter, the cover call. Imagine you own a house, let's say 100 shares of stock. Instead of just waiting for the house value to go up, you rent out the spare room. The rent is a cash premium you get for selling an option. You get to keep the house and you get a check every month. It's the ultimate side hustle for a portfolio. Here's the catch. If you sell a cover call, you're basically saying, I'm okay with not hitting a home run. If the stock goes to the moon and goes, or let's say goes off 50% in a week, you don't get all that profit. You give it up for that rent check. But honestly, most people go broke chasing home runs. We're here to hit base. Say you buy a stock for $48. You have scenario A. The stock hit 55, you sell at 50, you made $2 on the stock plus the $3 rent. Scenario B, the stock does nothing, it stays at 48, you keep your 48 and the stock and the rent of, let's say, 300. You literally got paid for the stock doing nothing. You get to choose your own adventure here, playing it safe. Pick a price close to where the stock is now. You get a fat rent check, but less room for the stock to grow. Going big, pick a price way higher. The rent check is tiny, but you keep more of the upside. It's all about how much insurance you want. Stop looking at the stock and option as two different things. It's one big sandwich. If you buy a stock for $48, but you get $3 in rent, your net cost is $45. Now the stock has to drop below $45 before you even start losing money. That's how you sleep better at night. Pro tip, don't buy a burger and a fry separately. If you buy the stock now and wait an hour to sell the option, the price might move and ruin your deal. In the trading app, use a net order. It does both at the exact same time. It's faster, easier, and guarantees your price. If the stock price falls, don't panic. You can roll down. It's like lowering the rent on the apartment because the neighborhood got a bit noisier. You buy back your old option for cheap and sell a new one at a lower price to get more cash. It helped like a cushion for the fall. If the stock flies past your price, you have a good problem. You can just walk away with your profit or you can roll up, basically paying a bit of your profit to move your sell line higher. Just don't get greedy. If you have made your money, sometimes it's best to just take the win and move on. Once you master this, you get fancy. You can use leaps, which is basically a long-term coupon instead of buying the actual stock to save money. Or you can ladder your options so you can rent money coming in the single week instead of a month. It's like building your own personal ATM. Before you go, remember these 4 things. Don't get greedy. Protect yourself. Think net. No free lunch. You're trading massive gain for consistent gains. If you can live with that, you're officially a strategic investor. Let's go get that rent money.